G'day taxpayers, hot on the heels of the RBA hawkishness yesterday, where Governor Michelle Bullock really painted a picture where they are itching to hike interest rates, and they will probably do so on any evidence that inflation is a little more persistent than they were fearing, even though it's driven by a lot of one-off factors, or if the labour market retains its tightness, that there's a rate hike in the agenda. I looked at one of my favourite weekly updates from my good friends at SQM Research, and each week they look at a couple of indicators on the economy. Two in particular struck me when I opened up my email last night. First one is that they look at asking prices for real estate. So it's not necessarily the price that people get. That's obviously the Totality series that looks at actual prices, but asking prices. And when the housing market's buoyant and you're a seller, you'll probably try to bump up what you're expecting to get for your house in the hope that you will get that higher price. And what struck me is that the asking prices on a nationwide basis show that houses, expected prices are up 11.8%, units up 11%, and the combined is 11.6%. So double-digit price expectations are there in the community for people looking to sell their dwelling, which is fitting into that upward momentum that we've seen in the Totality actual price series. So the housing market is boiling. They also ask about expected dwelling rent. So if you're a landlord and you've got your property on the market for rent and the market's tight, you might try to bump up your asking rent and hopefully get a higher return when you're renting out your property. And it's a similar thing. Rents had slowed down fairly aggressively from the 23-24 peak, and the middle of this year they had cooled off quite dramatically as population growth slowed a little bit and a few extra supply side issues impacted on the rental market. But again, there's an upturn in expected rents or asking rents for properties for rent. Combined increase is 5.3%, so not massively strong, but higher than it was. Houses up 5.1, units up 5.6%. So we've got this scenario where the rental market is starting to tighten again, and rents, well, all important of course, but rents have a direct feed into the inflation rate. So just when the RBA's got hawkish, there's a couple more indicators coming from SQM Research that the housing market, inflation expectations in housing, if we can call it that, for expected prices and anticipated rents are both increasing as well, and we know that they are both inflationary. So RBA will be looking at these on top of the other indicators and just sweating just a little bit more.